Since going public in late 2020, Airbnb's revenue has almost tripled, earnings has gone up by more than 500%, and it now generates over $4 billion in free cash flow a year. But its stock price is actually below its debut price back in December of 2020. It could represent an opportunity to invest in Airbnb today. Let's take a closer look. First, Airbnb Strategy. We all know Airbnb's name. It's become the verb for doing a short-term rental. Its business is the platform, not owning or operating the properties directly. As a result, it's extremely asset-light, able to operate at much higher margins than a business that might manage hotels or rental properties. It also has a very strong moat in its network effect. What that means is that each stakeholder on the platform benefits from each new participant. The more people who use Airbnb to find places to stay, the more hosts will want to have their properties on the platform, and vice versa. As a result of its asset-light model and strong network effect, Airbnb is extremely profitable. Last quarter generated 20% net margins and more than 41% free cash flow margin, turning $2.75 billion in revenue into more than $1 billion in free cash last quarter alone. We need to talk about risks too. It's a strong business, but it's not risk-free. Airbnb faces a few challenges, including regulatory pressures, reputational risk, and cyclicality as well. We'll start with regulatory threats. In the US and other markets, residential real estate is in short supply. It also happens to be most squeezed in some of Airbnb's most popular markets. Many local municipalities have already put restrictions in place on short-term rentals, and if this trend continues, it could reduce the supply and undercut Airbnb's current business and limit its future growth. Cyclical risks also should be considered. Short-term rentals are generally discretionary spending, most often leisure-related. Now, during economic softness, this is exactly where people pull back on their spending. Probably doesn't impact the long-term prospects, but short-term losses for investors who don't or can't hold through a downturn all the way to the recovery is a potential reality. Lastly, there's reputational risk. Airbnb's asset-light model is both a benefit in terms of profitability and scalability. However, it also gives up a ton of control by essentially outsourcing the acquisition and management of properties. Now, this has been suboptimal at times too. It has removed over 200,000 listings over the past 18 months because of issues ranging from properties that don't live up to their descriptions to hosts being accused of illegally hiding video cameras in properties. Now, so far, management has kept the bar very high for what they expect from hosts and moved really swiftly to remove those bad actors. But we shouldn't ignore the risk of a high-profile event or series of events undermining customer trust in the brand. While it's a fairly recent IPO, Airbnb's asset-light model has allowed it to scale up incredibly quickly. And while the international and even North American expansion opportunities are still significant, valuation really matters for a company of this size. We're also starting to see some slowdown in its growth rates. Looking beyond the near-term risks, Airbnb does look relatively appealing for long-term investors. Shares trade for about 33 times expected forward earnings and only 20 times free cash flow generated over the past 12 months. Now, considering the risks, opportunity, and the valuation, I think Airbnb should generate 10% plus average annualized returns over the next 5+ years. That may or may not beat the market depending on what it does, but it should prove better than the market's long-term average returns. This video was brought to you by the Motley Fool. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all scale sets and risk levels. Today, the Motley Fool is excited to bring to you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 627 percentage points. Go to fool.com/invest, and you can receive the top 10 best stocks to buy now.